Tuesday morning. How you doing, Dave?
I'm doing, man. I'm hanging in there. I'm working. I'm enjoying what I'm doing, and just keep on keeping on, man. How about you?
I'm doing all right. So the big news today is that in New Jersey, Governor Murphy decided to make real estate services essential, which means real estate agents are allowed to show houses. Now, I don't know if I necessarily agree that real estate agents should be going out there showing houses, but he did make it a possibility that if you need to show a house, you need to sell a house. If someone needs to move, you are able to do a one-on-one showing. You are still not allowed to do open houses, but the fact that he made it allowable, I think, put a little bit at people at ease. But there's still a lot of people out there who just don't want to go out. They want to, stay home and lower the curve. So what are your thoughts, Dave?
Yeah, no, I mean, I think one-on-one showings can be done a certain way. I think it has to be done with respect and responsibility. I mean, honestly, I see all these things from other countries and everybody else, and the way to keep this thing down is masks, gloves, the whole thing. And I think if you can do it that way and the seller is okay with it, and the seller actually walks out of the house and leaves for a while, you can't just let a buyer walk through by themselves. That's not going to happen. Or you tell the seller, look, I just want to do a quick video and we walk through the home and I'm going to show it that way. There's a lot of ways to look at it. And I think that we need to keep going. Right. It's for our own good, right? Mentally and physically and financially, right. But it's also for the good of the economy and good of the people.
Right. So the key is things, guys, everyone stay safe out there, make smart decisions, stay home as much as possible. There's always a lot of changes going on. Today, we are privileged to have the CEO of Proof Funding, Shmuel Shaiwitz, joining us today. Good morning, Shmuel.
Hey, good morning, gentlemen. How are you guys doing?
We're doing well. Thank you for joining us today.
My pleasure. You guys are doing a bang-up job here, keeping people informed, people keeping positive, especially your little backdrop over there, Mark. I love it.
Thank you. Yeah, it's Kidspiration behind us. Check it out online. Thanks for pointing that out. So Shmuel, tell us, how you doing? How's your business? What's going on in the marketplace these days?
So we're definitely keeping busy. A lot of people, I have friends who are telling me, oh, you guys must be killing it, raking it in. And the truth of the matter is, it is a bittersweet opportunity in the mortgage business. I think that a lot of people don't really understand what's going on in the marketplace. There's a lot of challenge. There's a lot of uncertainty. Interest rates have been all over the place. Things have somewhat calmed down, not as low as a lot of people would like, especially if you're looking to refinance. If you're looking to buy, which, as you guys are pointing out, not much opportunity. Whatever's out there, people are trying to really be cautious and prudent about it. So rates are still great. You just need to know where and what and why, how things affect the market. Other than that, the challenges have just been to try to get loans through the system.
Right.
A lot of changes in that regard, and people just need to be mindful of it. Again, opportunities, but challenge. Right. And people are looking to take advantage because rates are still historically low.
Right. So let's take this step by step. The application process is still the same these days in terms of applying for a loan, or has things changed in that?
So great way to start. So I would say, honestly, it has changed for most people.
Okay.
Because interestingly enough, on a refinance loan, there are many lenders out there. Proof Funding, we're not one of them, but there are many lenders out there that will not let you lock in your rate upon application.
Okay.
Which makes it a little uneasy for many people because, first of all, if you're refinancing a loan, how do I know what I'm getting into if you're not letting me lock in? How do I know where the market is going to be in 30, 60 days from now?
Right.
If I'm buying a home, even more so. I'm buying a home, you're telling me my rate is 3.5% today.
Mm-hmm.
When do you commit to me on that?
Right.
So hopefully some banks are going to adjust that and let you lock in on purchase loans. Hopefully that's the case. Many are just not letting you lock in that loan until your loan is approved. So you just have to be mindful of that. As you are going into a scenario and as you're dealing with a lender or even a realtor, just stress test yourself and say, well, what happens if rates are, a 0.25% higher? Where does that leave me on my payment? Am I still committed and willing to move forward? That's
right.
one. So in terms of the process itself, you need to just be mindful of when that check mark is that you can lock in that rate.
Right.
Separately, the process itself. Obviously, everybody's moved to digitally. You have to be able to be in a position to be able to digitally get everything to your lender, which is okay. Most have adapted pretty quickly, even the consumers who have been reluctant and hesitant. getting the communication to your loan officer or processor about who the point of contacts for your employment verification.
Right.
And definitely if you're moving funds around, those have been a huge bottleneck because it's hard to get in touch with certain employers that are closed, companies and businesses. So that part of the process itself is somewhat of a challenge. You need to be extremely diligent and proactive with it.
So are you for employment verification, are you allowing email verification now, or is it just still by phone?
So we for one, we've adjusted. Fannie and Freddie have come out with guidelines to allow for a streamlined verification of that employment. So we're certainly permitting it. Just keep in mind, and this is one thing I would say in terms of a challenge. I've seen many lenders that will not fund a transaction until they've confirmed employment, again, in real time.
Right.
So it used to be, in the past, you'd have a 10-day or a 7-day window where as long as the lender confirms someone's employment, you're okay to close that within 7 days. So usually when that closing disclosure goes out, you get employment verification. Now it's within 24 hours. And I would say within hours of funding, they want to make sure somebody is still employed before they fund that loan.
Right. Right. So then in terms of, getting approved is one thing, but then let's say you get approved now, how are you able to close? Are you able to get the back title ordered? Are you able to get documents signed? What's going on with that?
So for the most part, closings are definitely happening. Things have been moving, I would say, faster than I would expect. And to everybody's credit, the realtors who are coordinating a lot of these things, the title companies who are working extremely aggressively to try to get things done. The fact that everybody's working remotely makes it a big challenge. We're closing a purchase loan today, and it's literally just practicing the social, the physical distancing, as Mark pointed out.
Yes.
So, it's practicing that environment. So you're adjusting to that. But at the end of the day, most closings are taking place, albeit I'd say 12 to 24-hour delays if everybody's on top of things the way they should be. So I don't see delays in that other than, as I pointed out, verifying your employment and making sure that everybody dots those I's and crosses those T's before you're cleared for closing.
Right.
I would say, the biggest anxiety is really if things change even further, because Saturday, I believe President Trump was talking about just completely shutting down New York and the surrounding areas. And when I saw that, I said, well, if he truly does impose a shelter at home and you just across the board, then that would definitely be a game changer certainly for the real estate and mortgage business, because you won't be able to do some of what you're doing today. I mean, adjustments have been made for the electronic notarization to the states and to the counties that permit it. It's kind of on the side being ready. But so far, none of those things have to have been put into place.
Right. I mean, listen, there's places around the country now that are being shut down through May and June at this point. So, I think we're still weeks, if not a month or two away before getting somewhat back to normal. But the one thing that I can tell you that I think Dave and I have noticed is that showing time, has statistics of showing requests, and they're down like 99% in the last week.
Right.
So in the loans that you're doing now in the last week or two, are they all refinance, or do you have people still purchasing? I
have, surprisingly enough, a nice handful of people that are still buying, still moving forward. As I was saying to you earlier, I take everyone to the side, obviously not physically. Whenever I'm talking to any home buyer, I just say, "Can I ask you a personal question? Why are you moving forward with your purchase?" And I give them the disclaimer to say, I think it's a great opportunity to buy. I think you need to be cognizant of some of the risks and some of the challenges and some of the opportunities. I'm just curious why you're doing it in terms of the uncertainty of the market, uncertainty of your job, and uncertainty of values. And for the most part, most people are telling me in different words, even if the market does change, and then our professionals like us, they're not in the real estate industry and finance industry, they say their thought process is they're not speculating. They're buying a home. They want to live in it.
Right.
You have to pay rent to somebody. So why not pay something comparable, even if it's a little bit more, into a home, build some equity. If things drop 5%, 10%, again, nobody knows. Right. Then it's something they have to deal with. It's no different than a portfolio dropping a little bit in value. As long as you're not looking to sell in a short term, then the risk of losing that value is really limited.
Right.
So that's one thing that they're very, very optimistic about in terms of even if value does change, they don't think it's going to be a game changer for them.
Right.
And in terms of the job, look, they don't know. A lot of people are still buying homes with less than 20% down payment, which changes have taken place in the industry in terms of product. Still now you can still buy a home with less than 20% down, and they still go into it knowing, even though I'm putting in a little bit less money, I'm not so worried about my mark to market of my house, what the house is worth tomorrow. So
Right.
things are definitely, progressing in that sense, even on a purchase level.
Right. Right. And you lend in not just New Jersey, but New Jersey, New York, Florida. Are you seeing differences state to state in terms of, activity, or is it becoming level across the board?
So interestingly, New York and New Jersey seem to be, as always, on the forefront of a lot of things that are happening. So
right.
it slowly trickles its way, to other states. So you're definitely on point in terms of saying Florida was a lot less impacted with Corona than New York was, for example. But slowly, as they started to get more cases, the market started to slow down there. I have somebody who called me last week. He's looking to get into contract. He's in contract. He's looking to close within 45. So I think that's another thing that's really, as you mentioned earlier, things along those lines are getting kicked out. People want to extend their closing dates.
Right.
So even the ones that want to move forward, they're looking for 60, 90, 120 days, which is a challenge, A, in terms of interest rates and locking that in, and B, in terms of just making sure all parties are still committed and nothing changes. Mm-hmm. So if you're a realtor and attorney, yes, somebody's going into a deal in good faith that they want to close in 3 months from now, 4 months from now. What's to say he doesn't change his mind or something happen? So that's a real risk, because if you go into contract with somebody who may lose their job, or God forbid, or who may have some kind of a change in financial circumstance, how do you know who to pick at this point in time? So I would say there's a lot of diligence that needs to be done in terms of really scrubbing and pre-qualifying that buyer. And in terms of just geographically, it's unfortunately, it's across the board. We're in Pennsylvania, as you said, we're in 10, 15 states, and I've seen the slowdown happen, slower in some areas, but at this point in time, almost everybody's on the same page.
Right. I see Dave was itching to ask a question before, Dave.
So I want to change the subject a little bit and go into the thought process of what about what's going on with the difficulties in employment. I mean, I heard yesterday that Macy's is going to furlough their entire staff, 130,000 people.
Right.
How is all of this, let's call it quote unquote unemployment, going to affect our market? I mean, do you believe that this is something that's going to be temporary, and when we turn the switch back on, it's going to come back? What are your thoughts, Shmuel?
Again, I'm no prophet over here, but I that's one of my biggest concerns. My biggest concern, to your point, Dave, that Macy's is closing, is laying off all these employees. We've seen it in so many other industries and different markets, retail. Right now, last week, the unemployment number came out, 3 million jobs lost in 1 week. This week, Thursday, we're going to have another announcement. It may not be as bad as the 3 million, but that's just a small little adjustment. And we're going to see unemployment, unfortunately, skyrocket. And they're talking about 20 to 30% unemployment when all is said and done, even assuming the best case V-shaped recovery, which is a quick bottom and a soaring top, pent up demand, and we just go guns blazing after we get out of here. If you're looking at 20 to 30% unemployment, we're talking about Great Depression levels. That means 1 in 4 will be unemployed. That will affect everything. That will affect the mindset. That will affect the marketplace. That will affect people's willingness or ability to go out and do a lot of the things that they want to do. We were talking about earlier. What are people going to do? Once we're allowed to leave our home, where we're going to go, where we're going to vacation. What's the first place that you hit? The mall, the restaurant. I think personally, and I'm not doom and gloom, I'm super Mr. Optimistic. I think it will be a game changer. I think in the average consensus of what this may look like at the end, we're talking about 20% unemployment. And I think for the most part, people will not live life the way they used to. That's not to say things will fall apart. It's to say we will be in a new norm. We're talking about a new norm as now. This is kind of, stay home, stay safe, and stay out of everybody's way and stay healthy. We're trying to stay healthy right now. I think once this is done and you're able to get out, it will show the markets truly what the canvas looks like. And we're all going to have to adjust to it because a lot of people will not be doing some of the things that they were doing in the past.
Right. It's going to change people's mindset in terms of how they live their life now after living through this, right?
Yes.
They're going to think differently on how they live, how they spend their money, where they spend their let's call it, fun money. It's going to change the mindset for years to come after living through this.
Without a doubt. Look, I think people will still buy homes. Why? Because they need a place to live.
Right, exactly.
If I have to pay rent, I have to pay a mortgage. Let me adjust. So what will that adjustment look like? I'm a real estate mortgage guy. So to me, I look at it from our world, although I look at it from a very broad lens in terms of just mankind. To me, you may not see, and this is my own speculation, you may not see those starter homes, and maybe Mark, you could speak to this.
Right.
It used to be the one thing I saw that was an anomaly to me over the last decade was you have first-time home buyers buying $1 million homes.
Right.
I don't know about anybody else. I didn't buy $1 million home when I was buying my first home. I had a starter home, and I know plenty of people who had starter homes. They didn't do that. They literally went from renting, albeit renting a little bit longer than others, into this mansion or into this McMansion. And I think that's going to change. I think investors are going to change. I think investors and speculators are going to adjust to building or selling homes in that smaller price range. And I think that will make people more comfortable in terms of buying a home. I've heard builders on a broader global level, that's what they're already trying to adjust to. Lower priced entry level homes that are affordable, but nice, newly renovated or constructed, maybe a little bit smaller. So that's certainly going to adjust for people. So to your point, things will change from a economic perspective. Mm-hmm. I don't think it's going to prevent people from living. I don't think it's going to prevent people from investing. I think they're just going to be a little bit more mindful, have more reserves, have more, confidence in the product they're purchasing, mm-hmm. and not necessarily spend so frivolously as they did in the past.
Well, I think what we're going to see, and this is just my opinion, and everybody's got one. My opinion is, you said V, I say W, right? I think what's going to happen is there's going to be everybody's going to be going back to work, and maybe some people will get different jobs and stuff. And I think after a month or so, we're going to see that spike, and then it's going to come down a bit, and then it's going to go back up. I am going to look at this all positively and optimistically and say we're going to have a better world. Yes, there's going to be more paranoia out there of germs and stuff, which I think, honestly, I've never been a germaphobe, but I think that's going to push some markets. It's also going to bring new markets. I believe this is going to start a little bit recessed, but it's going to be a revolution of sorts, the digital revolution, which is the new industrial revolution. I believe that's what's going to happen, and I think in a year's time or less, I'm going to say less because that's what I believe. It's actually what I want. That's going to happen. People can tell me I'm crazy. I really don't care. But the thing is that I think we're going to do really well out of this, and I believe everybody needs to think positively and move forward with it and listen to what's going on here, what you have to say. Things might not be as great as we want them right now, but we're going to get there, and we're going to come out of this better, and we're going to grow in the next few weeks.
Agreed. I couldn't agree more. Again, nobody can predict, but if nothing else, we've seen in New York, in New Jersey, we're resilient, we're determined, we have grit. People they're not going to just roll over and play dead. They're going to push forward. Things may adjust, but if nothing else, especially with people on the forefront who are leading this revolution, as you're saying, Dave, you just have to see the opportunities, and people will make their way towards those opportunities. It will change, right, but there will certainly be opportunities.
Right. I mean, one of the things I've already seen is kind of, I'll use the word normalization at the supermarkets. Now, I don't go that often, and when I do, I get yelled at by my girls, but that's okay. But what I did see when I was there early Sunday morning is I saw the only thing that was empty was the paper aisle, which is ridiculous in and of itself, but probably they can't get the shipments in. Right. But but the meats, chicken, all the food, the eggs, there was food everywhere. Stuff was restocked of things that were missing. Some items that I wanted a couple of weeks ago I couldn't get, I can now get. So that's a normalization. And I just want to go out and not only thank all the hospital workers, the nurses, everybody who works at a hospital, everybody who works at supermarkets or stores that are working. I want to thank them as well. Agreed.
They're definitely, they're extremely stretched, and they're really, as you're saying, adjusting and adapting and helping us create a new norm, a baseline where you don't have to feel like you need to hoard things or you need to have that anxiety of not being able to get to something. Things are getting done, albeit a little bit slower than we would like, but I think that's also giving the markets and just communities a little sense of calm. Things are happening. Again, slower than we would like, but I think people are getting a little bit more comfortable with it, which is great.
Right. There was a whole piece the other day about the truckers across the United States who are committed to staying on the road and delivering, all the goods that they normally deliver. And they said, look, we're driving as fast as we can within the speed limits. We're getting to the places. Some of the places we get to, there are no workers there to unload their trucks, but they are continuing to deliver from warehouses to stores, and they will continue to do so. So, knowing that we'll have the supplies that we need, indefinitely, I think is a calming factor.
Agreed. Yeah.
I did get a text just now, Shmuel. Someone just texted to ask if you were able to share any information about mortgage forbearance, the process. Should they be calling their mortgage companies and asking for it? One person said they called their mortgage company and they can have a 3-month forbearance, but then at the 4th month, they have to pay back all 3 months and the 4th month. So
heard the same thing. That's ridiculous.
Can you shed any light on what's going on there with that?
So that's one of the things that I'm most concerned about in terms of people not having the proper information.
Okay.
A lot of people think that they just don't need to make a mortgage payment for the next 3 months. That's not the case.
Mm-hmm.
You need to call your servicer. You need to wait on hold for hours and hours, sometimes days, and get in touch with somebody and agree and have them agree. If you can get it in writing via text or an email or something, then do that, because I can't tell you, having gone through 2008 and all of the aftermaths with modifications and forbearances and foreclosures, I can tell you that there are horror stories and people are still trying to unravel some of the harm that was done at that point. So to me, that's my biggest worry, that people don't know how to handle this, which is there is this forbearance. There's a difference between what your bank and what Fannie and Freddie and Ginnie Mae are allowing banks to do versus what the governors are saying and some of the local politicians, which is there shouldn't be any mortgage payments and you don't have to make your mortgage payments. You have to adhere to what your servicer says. One bank, one servicer will act differently than someone else. One thing that is uniform now that Fannie and Freddie and FHA came out with their policies is that you have this 90-day forbearance. But exactly what you're saying, Mark, it's 3 months. After 3 months, your payment is due. You owe them, if your monthly payment is $2,000 a month, month number 4, you owe them $8,000.
Right.
People, if you can't make that payment April, May, June, how are you going to be able to do all of that in July? So then the question becomes, how does the servicer adjust to the new reality of you not being able to make that payment?
Right.
Yeah, go ahead, Dave.
I don't want to sound like a jerk, but I mean, I can do that. But how does a bank make sense of that? I mean, I heard this yesterday from a friend of mine that said that, the bank said, oh, yeah, don't worry about it. You don't have to make any payments for 3 months, but a month 4, you got to pay it all back. How does that make sense, man?
How does it make sense? It doesn't. What they're looking to do is they're looking to pause for 3 months. Conceptually, to your point, Dave, if a person cannot make their payment today, how will they be able to make 4 payments in 4 months from now? I don't know. And that's why I answered your question, Mark, with that's my biggest concern. My biggest concern is a lot of people I have somebody who is in contract to buy a home in Bergen County.
Right.
Looking to sell his house in New York.
Mm-hmm.
And right now the house in New York is on the market, but obviously he can't sell it.
Right.
Telling me that part of the way he's going to build up enough down payment for his home in New Jersey is he's not going to be making his next 3 months of payments on his New York home. And I'm thinking, I don't understand. You're not making your payments on your New York home and you plan on going into contract. You are in contract to buy a house in New Jersey. To me, that's just something that I can't grapple with. And I, without telling him Thank you, but no thank you. I really didn't want to do business with somebody like that, because you just have to know the reality. If you can make the payment, make your payment. If you can't, then don't. Don't game the system, and understand the system. The system is, that's what it's set up for, Dave. I agree with you.
Yeah.
How does it happen? It happens
So-
where they're hoping that people don't. I honestly think it's psychology. They're hoping people don't need to miss 3 months of payments. They're hoping it's 1 or 2 and you can catch up. What they're not thinking about is the repercussions. Servicers are not, but even more so the individuals. What are my repercussions if in 2 or 3 months from now, I can't make the bank whole? What happens to me? It's either a payment plan, a modification, a restructuring, or you backload it to the end. Then the question is, how does that impact my credit? It will no doubt have an impact on someone's credit. So you just have to take that risk into consideration.
So let me ask you this question. When a forbearance, the true definition of the term, says it will not impact your credit. So now what you're saying is that forbearance for that 3 months, when you go out of the forbearance, then it's going to impact your credit. So it's like, damned if I do and damned if I don't. I don't understand. And honestly, I did a broadcast last week with Tim Harris, and Tim Harris, if anybody knows Tim and Julie Harris, coaches in real estate for years. He's recommending to everybody to get a forbearance on everything, not only your mortgage, but on everything, right? If you don't have any money coming in, how do they expect you to make that payment? If you can make that, I get it, if you can make that payment. But if you can't make that payment, you need it to spend on things, I don't know, maybe food, right? If this is a couple weeks away, I get it. But we don't even know. We were told April 30th. It could be May, June. I don't know, but personally, I wouldn't be in that position. I mean, I'm trying to put things in place right now to protect myself, and my recommendations to people is the same. But the banks need to get off their ass and think of something that's going to work for everybody.
So I think the answer is, if a person, and unfortunately, and as we said before, you're talking about 20 to 30% unemployment potentially, and that's unemployment. We're not even talking about people who are employed but not making any money if you're in the commission world or if you're working on bonuses and incentive. So you're talking about 30 to 40%, if not more, of Americans who will not be in the same financial position, who are already not in the same financial position. How are they going to get out of that hole after 3 months of the forbearance? The answer is, if you can't, unfortunately, then who cares? Like, not who cares, but
right.
Take the system for what it is, modify your payment, figure out how to adjust it and be comfortable with it. I don't know if I would as adamantly encourage my clients to just forbearance on everything and stop paying or whatever it is. Obviously, each circumstance stands on its own, but at the end of the day, again, having experienced the 2008, and I actually think this will be worse. I hope not. The answer is, do what you need to do to survive with proper guidance and understanding. So if the issue is merely my credit will be ruined or impacted, meaning there will be a little blemish on my thing that says forbearance or modification or settle, whatever it is, then all right, then that's the worst case scenario. It's okay. Life will go on.
All right. So Shmuel, let's take this one step further, right? You take your mortgage on forbearance for 3 months, but you pay your taxes through your mortgage. What happens to your tax payments?
The bank will have to pay it.
And the banks are going to be able to cover all these tax payments, all these municipalities, or are they going to default the municipalities?
That's a great question. So the answer is they're going to have to do it. There was a huge concern, and I've actually been talking to many of the local realtor associations and different professionals who've confirmed this, to tell them there's a huge underlying concern right now with FHA Ginnie Mae loans,
right,
which is that the minute now, April 1st, when the new norm comes into play where people have to make their April payment, if a government loan, a VA, FHA, or rural loan, USDA loan, if a person doesn't make their payment, the servicer is obligated to forward that money to the bondholder, to that investor. So I want to take your point to an extreme level, Mark.
Yeah.
If we're a servicer and you're not getting that monthly payment in the door, and then you're obligated to make millions of dollars in payments to your bondholder, to your insurer,
Right.
how are you going to do that? So because of that, Ginnie Mae, which is FHA and VA, USDA, I'll tell you for sure, FHA loans have slowly been unraveling, which is a huge concern. If you're a realtor, if you're getting pre-approvals on FHA loans, I'm not here to scare anybody, and I'm not here to say something that's certainly not a fact. If you're getting an FHA loan, a pre-approval on an FHA loan, or if you have a client who's getting an FHA loan, I would tell you to be extremely mindful,
Right.
because that product, that market is slowly unraveling. We saw it 2 weeks ago with the non-QM, with the bank statement, with the no cash investment property with no income verification. Some of these streamlined alternative income verification programs have disappeared. True jumbo loans have disappeared.
Mm-hmm.
Not bank portfolio loans, but jumbo off market loans.
Right.
You can start to see changes in the government loans because of this servicing issue. So what happened? Ginnie Mae came in and they basically gave the servicers a lifeline. They said, look, we know you're not going to get these mortgage payments in for 3 months, 6 months, whatever it is. We will give you a line of credit to make those payments to your bondholders.
Right.
So on the one hand, so the system won't crash, but now banks are having to borrow money to go and pay their insurers and their bondholders. So I think depending on how long this actually stays in place, this will be a huge mess for many people. So to answer your question, the servicers are being capitalized. They're not being given free money. They're being lent money to make their covenants and to make their payments.
Mm-hmm.
Consumers are going to do the same. Literally in every marketplace, consumers will have to do what they need to do. Some of them will be able to make payments. Many of them will not be able to make payments. They're going to have to go into those agreements. Servicers and banks are going to be adjusting to the new reality of, I'm not getting these payments for the next 30 to 90 to 120 days. How do we make our payments? You will see a change in programs, mortgage programs. You will see a change in just attitude of change to people who how they just function normally in society. But at the end of the day, systems are being made to make sure markets function and nobody will lose their home. Nobody will be at risk of the concern of having a bank harass them. They just need to get through the next 3 to 6 months.
Right. So what tips can we leave everyone with today? What advice do you want to give out to everyone, Shmuel?
What advice? I would say the most important thing is to continue to connect yourself to true professionals who understand what they're saying, who understand the market, who are not just giving you their opinion, and who are not just disseminating. I've seen a lot of people just forward some of the state laws and legislator on changes.
Mm-hmm.
If most people can read that stuff and understand it, then you don't really need that intermediary. I think intermediaries like us need to be able to break down things in a person-to-person, real-time manner to be able to communicate. I think it's important to align yourself with professionals. It's important to get as much information as possible, and it's important to just not overreact and panic. I know a lot of what I was saying is scary and frightening, but I think it's because I'm on the inside looking out and I see what the banks are going through and the barrage of calls that are happening from people who want to pause their mortgage. You should do whatever you need to do that makes the most sense for you, but speak to real professionals who can give you that level of comfort and guidance, point you to the professionals that can help you make the best decision, and just do things patiently. Don't act, too rash. That's my best advice right now.
Right. Dave, any thoughts?
No, I think that everybody needs to think about what they've got to do and really look at everything they've got to pay and try to cut wherever they can, right? Just to be on the safe side. And you know what? I mean, I get really passionate about things and what I think, and my point is really, I'm going to stay positive through all this. And look, we all have the same issues. We really do. Now it's like we're all together. Nobody's alone here. Nobody's alone here. Just remember, the most important thing is to be nice. That's it.
Right. So just some thoughts. Shmuel, first of all, thank you so much for coming on today, giving us all your insight and thoughts on the market and how to handle it. Keep calling your friends and family. Keep calling your clients. Check in on all the small businesses. You know, pick 2 or 3 every day to call, reach out to. I think it's super important that, you know, you let people know that you're there for them. Find out what they need. Maybe you can connect them with someone. You know, maybe they need a professional like Shmuel to talk to about their mortgages, or, you know, maybe they need some help just getting out on social media, their deals that they have in order to keep making sales. But keep focus on, you know, the importance of making sure everyone's okay. We're all in this together, as Dave said. And hopefully, you know, this new normal will change to get back to the old normal where we can get back to doing business on a daily basis. So thank you all for watching today. Level Up today. Thank you, Shmuel, again for everything. Dave, tomorrow morning.
Stay safe, stay positive.
Thank you, guys.
Have a great day.
Take care.